Time now to check in on the fixed income and currency markets, and we've got S.J. Balesh, who's Senior Director for Treasury at IDFC, joining us live on the show here from Mumbai. Now, Balesh, to begin with, just focusing on the fixed income markets, the outlook for the 10-year bond, where do you believe yields are headed?
It's difficult to answer, especially with credit policy around the corner. But what I can say, first to just quickly give a feedback on the credit policy, it's a close call, but given the IIP data that came out yesterday, I think the balance has clearly moved in favor of for a rate cut. While there is still, RBI will be definitely looking at the inflation data, which is expected on Monday for March. While it's expected to come below 7%, but that's purely because of the base effect. And once the base effect wears off, you would quickly see by the middle of the year inflation going up to 9% levels. Having said that, I think if in case a rate cut happens next week, you will see immediately a small rally in the 10-year yields. It's anyway already come down from 870 levels to 840-45 levels. If you see a 25 basis point rate cut on Tuesday, you would see quickly it's coming back to 835-40 range levels. But over a medium term, the yields definitely are expected to move up purely because of the supply factors. There's almost going to be 5,87,000 crore of issues that's going to happen over the course of the next 12 months, with almost 3.5 lakh crore issues in the first 6 months itself. So yields can especially the months of May and August, which are heavy supply months, you could easily see yields moving up to 875 levels, and the yields could be capped only depending on how RBI plays out the OMO factor, because if unlike in the previous years when RBI has been doing OMOs only in the busy season, it's the second half of the financial year. But this year we could easily see RBI coming out of the OMOs in the beginning of the year itself to ensure yields are capped in the 10% government securities.
Sure. So, Balesh, what is the IDFC expectation? Are you expecting the repo rate to be cut on Tuesday? And along with that, if you are indeed expecting a repo rate cut, do you believe that the RBI will cut CRR as well? And do you expect something on that front?
While we definitely are expecting today a 25 basis point CRR repo rate cut on the Tuesday policy, I don't believe there will be a CRR cut in the Tuesday policy, because the amount that banks are borrowing from in the repo market from RBI has sharply moved down from 1,90,000 crore to almost 85,000 crore, which is very close to the RBI comfort levels, and therefore I don't believe RBI would cut CRR on Tuesday.
Right, Balesh, you did speak of 8.75 as the yield on the 10-year bond, but given that the kind of liquidity pressure that the bond market is under, do you think that 9% also cannot be ruled out as being a level that we can watch out for on the horizon?
Yeah, right. I mean, if 9% definitely is a number people will be watching for if in case RBI doesn't come out with the OMO and the liquidity also tightens in the middle of the current financial year. Definitely, yes.
And Balesh, you did mention, we have seen, of course, that the liquidity deficit has climbed down in recent weeks. But are you confident that it will settle to the, to a level where the RBI is comfortable, as in about, 55 to 60,000 crore, which would meet their target of a 1% LETL position?
Right. See, that would also to a great extent depend on the external flows. The external flows have definitely slowed down. So that's a factor to look out for. When we look at the domestic liquidity. Having said that, RBI would endeavour to keep the liquidity at these levels, because my personal opinion is even if RBI cuts interest rates, if liquidity doesn't come back to the system, you won't see yields coming off. To give an example, today, while repo rate is at 8.5%, the 3-month CD levels are close to 10%. There is a 1.5% difference between a repo rate and a 3-month CD levels, which is substantially high, and which is purely building in illiquidity conditions. So definitely, I would like to look at liquidity more than an interest rate cut. some cues on liquidity from RBI than in an interest rate cut in the ensuing policy.
Right, but Balish, the bigger concern for all of you in the fixed income markets is the short end of the curve, which has been fairly high on account of, the point that you made, the liquidity conditions being tight. Now, some of your colleagues in the industry believe that the CRR needs to be tinkered with more than the repo rate because inflation continues to remain a concern. They aren't expecting too much on the repo, expecting more on the CRR. The chairman of SBI even saying that the RBI may cut the CRR by 75 basis points.
Right. Definitely RBI will use CRR in the course of the year, but I don't believe they will use it in the April credit policy because now they are seeing liquidity at less than 1 lakh crore. Having seen close to 1.5 on a sustained basis, RBI definitely will keep the CRR cut for another day when liquidity could move up, and therefore I don't believe in the Tuesday policy RBI would cut CRR.
Right, and wanted to get your view also on the rupee. What are the kind of levels that you think one should be watching out for?
The rupee today has become, a play, purely driven by, the FX flows from the capital market. I mean, through the FII flows, and given the uncertainty in the market, especially given for GAR and also the general headwinds that the economy is facing, I wouldn't be surprised if we very soon touch 52 levels.
Okay, we'll leave it at that. Thanks very much, Mr. Balish, for joining in on the show and giving us that view with respect to your expectations from the credit policy as well as where you see the yield on the 10-year bond headed.